Chapter 17, The Metrics That Define Us, Continuation. The gleaming neon lights of Madripoor framed the conference room windows as the team at Ascension Robotics prepared for their most critical challenge yet, mastering the KPIs. These metrics weren't just abstract numbers, they were the lifeblood of the newly acquired 951 Tokenization Blvd, the humanoid robotics factory that promised to redefine the future of Robo-Rumble's operations. As the group delved deeper into the numbers, the tension was palpable. Each KPI painted a vivid picture of their new venture's current state and future potential, and each team member brought a unique perspective to the table. Breaking down the KPI's net operating income, NOI, $4,717,640. Camilla leaned forward. The NOI is like the pulse of this factory. It shows how much money we're making after paying for operational costs, like maintenance and management, but before paying debts or taxes. Milo chimed in, it's the first line of defense. If this grows, it means our day-to-day operations are thriving. What it means, NOI reflects operational efficiency and profitability. It's what keeps the factory running, funding innovation, and covering unforeseen expenses. Capitalization rate, cap rate, 10%. Sophia tapped her pen against the table. A 10% cap rate signals that this property is a bit riskier for investors but has higher potential rewards. Milo added, it's like buying stock, a higher risk, higher reward. We need to show investors that the risk was worth it. What it means, cap rate compares property income to its value. A higher rate often means higher returns but also greater risks. Debt service coverage ratio, DSCR, 1.50. Arit, scanning the report, remarked, a 1.50 DSCR means we're making 50% more than what's needed to cover our loan payments. That's breathing room, but not enough to relax. What it means, DSCR measures financial health regarding debt. A ratio above 1.0 shows you're making more than enough to cover your debt obligations. Occupancy rate, 100%. Every inch of this factory is in use, Kimla said with pride. That's efficiency at its peak. What it means, occupancy rate indicates how much of the property is actively used. A high rate means resources aren't sitting idle, maximizing potential income. Tenant credit quality, Sophia grinned. An A grade is gold. It tells our investors that our tenants or operations in this case are reliable and financially stable. What it means, this metric assesses financial stability. Strong credit quality builds investor trust and ensures steady cash flow. Lease Expiration Schedule, 10 years of stability, Ara said. We've got time to plan without worrying about renegotiations. What it means, longer lease terms reduce the risk of income disruption, giving the team a solid foundation to build upon. Market rent versus in-place rent, $46.17, versus $45 per square feet. Milo frowned. We're undercharging compared to the market rate. It's a small gap, but every dollar matters. What it means, comparing market and in-place rent shows whether the property is maximizing rental income or leaving money on the table. Effective gross income, $6,739,486. This is the total before we deduct operational expenses, Milo explained. It's our revenue starting point. What it means, it sums up all sources of income before expenses. It's the big picture earnings snapshot. Operating expense ratio, OR, 30%. 30 cents of every dollar goes to operational costs, Kimla said. It's solid, but we should aim lower. What it means, OR reveals how efficiently income is managed. Lower ratios mean more profit stays within the company. Internal rate of return, IRR, 12%. This 12% growth rate tells investors we're a good bet, Milo noted. What it means, IRR gauges an investment's profitability over time. Higher IRRs are a green light for stakeholders. Net present value, NPV, $2,100,000. Positive NPV, said the broker, stepping into the conversation. That's the sign of a worthwhile investment. What it means, NPV adjusts future earnings to today's dollars, ensuring the investment will pay off in the long run. Cash-on-cash return, 9%. Sophia's eyes lit up. For every dollar invested, we're returning 9 cents annually. That's solid. What it means, this metric directly reflects the annual cash return investors receive compared to their investment. Power Broker's score, 4 stars. The broker smiled. This score shows how appealing our property is in the market. It's like our reputation rating. What it means, a high score signifies desirability and potential, drawing attention from key players in the industry. The team's vision, a blueprint for growth. The numbers were just the beginning. Each KPI was a stepping stone for the team to turn 951 Tokenization Blvd into more than a factory. It would be the epicenter of Robo-Rumble's next chapter. Together, the team aligned their strengths to ensure every KPI improved, Kamala refined production layouts to drive efficiency and boost NOI. Milo tightened cost controls, aiming to lower the OR and maximize IRR. Sophia advocated for ethical innovations to enhance tenant quality and community engagement. AR identified emerging markets to bridge the rent gap and increase occupancy stability. As they stood in the glow of the factory's automated lines, the team wasn't just building robots, they were crafting a legacy. Each metric was a thread in a tapestry that would define not just the factory's success but their place in Madripoor's neon-lit skyline. Together, they would ensure that Ascension Robotics soared. The Neon Venture, Ascension Robotics' Journey in Madripoor Prologue, Shadows and Skylines in Madripoor, a city where gleaming towers of technology cast long shadows over labyrinthine streets. Ascension Robotics emerged as a daring player in the humanoid robotics field. Fresh from securing a record-breaking Series B funding round, the company's leadership was abuzz with their next objective, acquiring a state-of-the-art factory in Madripoor's industrial sector. At the helm was Leona Hart, Ascension's charismatic CEO, a visionary who believed in blending humanity and robotics to shape the future. Alongside her was Akio Tanaka, the pragmatic CFO, whose precision and caution balanced Leona's boldness. And then, there was Mason Vale, known simply as the Broker. A master of Madripoor's intricate markets and unspoken rules, Mason's shadowy presence promised a calculated path to success or ruin. Chapter 1, The Call to Learn. Leona and Akio arrived at Madripoor's SIM Institute, an elite hub for real estate and investment strategists. Mason guided them into a conference room where holographic charts illuminated the air. Before we make moves, we sharpen our tools, Mason said, gesturing to the data surrounding them. SIM's history and mission. As Mason narrated the Institute's legacy of empowering businesses, Leona absorbed its values of ethical strategy and precision. Membership benefits. Akio eagerly dived into tools like market trend dashboards and financial simulators, already plotting projections. Mason concluded, the Institute equips you to make informed decisions. Here, we build the foundation for the venture ahead. Chapter 2, Balancing the Books. At a financial workshop, Akio dissected the factory's numbers. Key ratios. The factory's low debt-to-equity ratio reassured Akio, but potential maintenance costs raised questions. Cash flow analysis. Projections showed the factory could generate profit within 8 months, but only if Ascension met aggressive production targets. Leona leaned closer, studying the charts. What's the risk if we fall short? Akio replied, margins get thin, but it's manageable. We need to control operational costs early. Mason, watching silently, smirked. The numbers tell a story, but never the full plot. Chapter 3, Understanding the Market. Mason led the team into Madripoor's bustling industrial sector for on-the-ground market analysis. Demographics. The local workforce was skilled but stretched thin by competing industries. Economic trends. With Madripoor rapidly automating, humanoid robotics was poised to dominate, but the competition was fierce. We're not just fighting for space, Mason warned. We're fighting for minds of workers, customers, investors. Leona nodded, determination hardening her gaze. Then we'll outthink and outwork them. Chapter 4, The Lease versus. By debate back at their temporary HQ, the discussion over lease versus buy turned heated. Akio argued for leasing. It keeps our capital free for contingencies. Leona countered, owning gives us control. This isn't just a factory, it's our flagship. Mason broke the tension. Lease or buy, what matters is agility. Which option lets us adapt faster to change? After hours of debate, the team chose to buy, leveraging their Series B funds for long-term stability. Chapter 5, Ethical Grounding. As they prepared for negotiations, Mason brought them to a meeting with some mentors to discuss ethics and standards. Code of Ethics. Ascension committed to fair practices with workers and local partners. Professional Conduct. Leona insisted on setting a standard of transparency, a rare virtue in Madripoor's cutthroat market. Our name should mean something, she declared. Trust builds bridges where ambition can't. Chapter 6, The Personal Stakes. Leona's backstory emerged during a late-night strategy session. Born in Madripoor's Undercity, she had witnessed firsthand the struggles of workers displaced by automation. Her vision for Ascension Robotics wasn't just about innovation, it was about empowerment. Robots shouldn't replace people, she told Mason. They should elevate them. Mason, usually reserved, shared his own scars. I grew up navigating these streets. You can't outsmart Madripoor, it doesn't forgive mistakes. But if you learn its rhythm, it can be a partner. Chapter 7, The Auction Tension. The auction unfolded in a glass-walled skyscraper overlooking Madripoor's neon-lit sprawl. Competing bidders included Victor Dynamics, Ascension's fiercest rival. Mason orchestrated Ascension's bids like a symphony, balancing aggression with calculated retreats. When Vector's CEO, Sloan Vickers, tried to intimidate Leona with escalating offers, she held firm, countering with a bold final bid, $20 million. As the gavel fell, Ascension secured the factory. Mason whispered, "You played that perfectly." Chapter 8, Building the Vision. With the factories secured, the team launched into retrofitting. Automated production lines, designed to scale from humanoid assistants to industrial models. AI labs, for advancing robotic empathy and adaptability. Community spaces, offering job training and upskilling for Madripoor's workforce. AKIO's precision ensured the budget stayed on track, while the owner inspired the team to push boundaries. Epilogue, Rising lights. Months later, the factory buzzed with activity. Ascension Robotics had not only built a production hub but a symbol of possibility. Leona stood on the observation deck, watching robots and humans working side by side. "This is what I dreamed of," she said softly. Mason, ever enigmatic, tipped his hat. "Dreams are just beginnings. Keep building." In Madripoor, amidst the glow of neon and the hum of progress, Ascension Robotics didn't just find a home here, they carved their destiny. Ascension Robotics, Chapter 18, The Heart of Innovation. The buzz of machinery filled the air at Ascension Robotics' newly acquired headquarters at 951 Tokenization Blvd. This wasn't just a factory, it was the stage for a new era of humanoid robotics. As the sun poured through the glass-paneled conference room, the leadership team gathered for a critical meeting. Each member held a stake not only in the company's growth but in defining its legacy. The broker stood at the head of the table, their presence commanding as always. On the sleek digital display behind them, a SIM 101 framework for operational excellence illuminated the room. Camilla, the visionary Camilla, leaned forward, her eyes scanning the debt-to-equity ratio. "Our current ratio is 0.75, she announced. Her voice was steady but carried a sense of urgency. "This tells us we're leveraging debt responsibly, but we need to maintain that balance as we scale. We can't afford to overextend." Camilla had always been the visionary, seeing potential where others saw risk. But her sharp financial acumen kept her grounded. To her, the factory was not just a business, it was a mission to democratize robotics technology. "Profit margin sits at 22%, she added. "It's a strong start, but our goal is 30%. We'll achieve this by refining our operational cash flow." Milo, the strategist Milo, the numbers guy, clicked his pen as he dove into operational cash flow. "We're at 5.2 million from core activities this quarter. This liquidity gives us room to breathe, but we need to watch our capital expenditures. Upgrading the AI-driven assembly line will cost 1.8 million, are worth it for long-term growth, but let's not forget the payback period on that." He had a knack for turning numbers into narratives. To Milo, every decision was a chess move, and he saw this factory as the king piece that could either elevate Ascension Robotics or sink it. His strategic insights often served as the glue that held the team's bold ambitions together. Sophia, the innovator Sophia, the engineering genius, tapped the digital map of the factory floor. "Here's where we implement optimal layout for production. I've sketched a reorganization that reduces travel time for components by 15%. With automation handling 70% of assembly, we can boost throughput by 10% without adding headcount." Her designs didn't just optimize, they revolutionized. Sophia's arc was one of transformation, from a scrappy inventor working out of her garage to leading the most advanced robotics factory in Madripoor. She wasn't just building robots, she was redefining human-machine collaboration. "Expansion plans are already in the works," she added. "We're prototyping for the healthcare sectoral exoskeletons for physical therapy. Target market analysis shows a 12% annual growth rate in that segment." Ari, the connector Ari, the dealmaker, turned the conversation toward lease versus buy decisions. "We're leasing half the equipment," he said, his tone calculated. "It gives us flexibility to pivot if new tech emerges, but I want to start a transition plan for owning by year 3. Long term, that's where we'll save." Ari's gift was in relationships, so whether with suppliers, investors, or customers. His arc was about proving himself not just as a connector but as someone who could build lasting partnerships that fueled Ascension Robotics' growth. "Our tenant credit quality remains A-grade," he noted. "That's thanks to the team's relentless pursuit of operational excellence. Investors see us as a safe bet, but we've got to keep delivering." The broker, the architect the broker, ever enigmatic, summarized the team's progress. "We're balancing immediate production needs with future growth. Our ROI on the humanoid robotics line stands at 18%, with an NPV of 3.2 million and an IRR of 14% on new investments. These metrics are the lifeblood of our decisions." Their role wasn't just to guide, it was to orchestrate. The broker's arc was one of mentorship, transforming a team of talented individuals into a cohesive force capable of shaping the robotics industry. "Numbers don't lie," they said, their tone even. "But the decisions we make with them define whether we become a leader or just another player." The turning point as the meeting concluded, Camilla stayed behind, staring out at the factory floor. Sophia approached, sensing the weight on her friend's shoulders. Big dreams, huh? Sophia asked, her voice lighter than the moment deserved. Camilla nodded. Sometimes, I wonder if we're moving too fast. Sophia smiled. Fast is good. Robots are about precision, not hesitation. We're the team to pull this off. As the sun dipped below the horizon, their silhouettes framed the humming machinery, a testament to the possibilities ahead. The KPIs were more than numbers, so they were milestones in a journey that intertwined technology, vision, and a human spirit. Ascension Robotics wasn't just building robots. It was building the future.